Tuesday, June 4th, 2019, Maneco 64, home of alternative economics and contrarian views. A very interesting day in the markets yesterday, especially for the precious metals. Overnight, we've had news from down under in Australia that their Reserve Bank have cut rates for the first time, I think, in over 3 years. So the central bankers are worried about what they call deflation. Of course, deflation doesn't mean our cost of living prices going down. Deflation only means that their Ponzi scheme is under threat. Their financial bubble is under threat. So they're going to do everything possible to try to keep it going by cutting rates, by probably printing more money through QE. But that's not going to make anything better for the general public, of course. It's just going to help speculators and debtors, big debtors, like the governments all around the world. Headlines, let's see, Druckenmiller dumps all his stocks, piles into treasuries, expecting rates to hit zero. Who's Druckenmiller? Well, Stanley Druckenmiller used to run one of the most successful hedge funds. He worked for George Soros, and this is what he says here, and I quote, "I can easily see 2-year notes yield easily going to zero, and I would say the odds are very high that they, meaning the Fed, would cut 50 to 100 basis points in the next year." I think he's right. Yes, the Fed can control short-term interest rates. Are long-term interest rates going to keep going down as they are? We'll have to see. I think it's about time that we actually get bond prices going lower and yields going higher, even in a time of deflation. I think there's a lot of complacency, and I know that yields have dropped dramatically and very sharply recently, but I'm still of the view that the 31-year, 38-year almost bull market in the bond market should be ending soon. Things can't go on forever, and we'll have to see about that anyway. So Australia here, our friend Philip Lowe, he's the governor of the Reserve Bank of Australia. I've spoken about him before. I've covered some of the videos from John Adams and Mr. North. They've covered the fact that Australia keeps 80 tons of its gold, or almost all its gold, at the Bank of England, that there hasn't been an independent audit of it. They've been very critical of this bureaucrat, Mr. Lowe. So FT says Australia cuts cash rate for first time in 3 years. Country's economy is under pressure amid escalating trade tensions. Notice how they blame trade tensions, right? Maybe not that, they don't blame the fact that maybe the credit cycle is just turning. So I'll just quickly go through this here. Australia's central bank has cut its key policy rate for the first time in almost 3 years on Tuesday, in a move that was widely anticipated by financial markets amid an economic slowdown in the country. The Reserve Bank of Australia reduced its cash rate to a new all-time low of 1.25% from its previous record low of 1.5%. With Philip Lowe, governor, highlighting subdued inflation and wage growth. I've got a lot of Australian viewers, and they've told me that the cost of living is not subdued, the rise in the cost of living. It's a great deception, this talk of subdued inflation by central bankers. They need an excuse to keep, this gravy train, this, to keep the punch bowl out for the debtors, for the speculators. And that's why I want to talk about now how currencies, all these currencies all around the world, including the dollar, including the euro, including the Aussie dollar, including the Swiss franc. They're all going to keep sinking. Don't be fooled into thinking if the dollar starts going lower that you're going to be okay holding other paper currencies or irredeemable currencies. You need to have precious metals, gold and silver. So currencies, they're all sinking. I mean, this is part of an article I wrote back in 2007. I've been covering this for over a decade. I used to have a blog called For Sound Money. It doesn't exist anymore, forsoundmoney.com. But I used to forward my stories to this blog called marketoracle.co.uk, and they keep my stories there. So I've got here the article from 2007, April 2007, Currencies, they're all sinking, part 2. So this is not new. And what do I say in this story? I say last December, 2006, we wrote in there all thinking about how our present monetary system is a dollar-based system and how it has evolved. We also noted how all the major so-called hard currencies, along with the dollar, had been losing value against gold since 2001. In part 2, we will be giving an update on how the major fiat currencies are faring against gold at the present time. I've had comments from viewers saying, you do a disservice to your viewers. Tell them that they should hold gold even if the dollar starts going down against against other currencies. They need to hold other currencies because gold will go up against dollar, but it won't go up against the other currencies, and that's complete. That's not true if you look at the facts here. So just to show you how we've evolved, back then I looked at the prices here, and gold had gone from 618 to 684 in dollars. So just keep that in mind. The euro had gone from 472 to 502. The British pound had gone from 316 to 342. Swiss franc had gone from 754 to 823, and the Japanese yen had moved from 73,000 to 81,000. So last night I looked at the major currencies and how they have fared for this year until June 3rd. So these prices are from yesterday's close, so to speak, and actually wrote the numbers here on the back of this postcard I got when I went to visit the Bank of England Museum. You can see all the gold bars there, and I wrote it all here, and I'll read it out to you to show you how these currencies are going to keep sinking, and you need to have precious metals. So the euro ended last year at 1127.18. Yesterday it closed at 1178.18. So gold is up 4.52% against the euro. Sterling closed last year at 1,004.90. Yesterday it closed at 1,044.90, up 3.98%. So actually sterling is outperforming a little bit the euro. New Zealand dollar, the Kiwi, 1908.56 last year's close. Yesterday 2007.79, 5.2%. So I think the Kiwi is the worst performing of these major currencies I'm going to talk about here. Aussie dollar, 1808.80. Yesterday it closed at 1895.60. That's 4.8% gain. So you see they're all sinking still all together. It doesn't matter about the dollar. The dollar itself, 1282.36, 1324.60, up 3.3%. Japanese yen, 139,837. Yesterday it closed at 143.95. Just look at how much that's moved. Back in 2007, the yen was at 81,000. Now it's 143,000. Do you need more warning about this? Well, the yen is up 2.32%. Well, it's down 2.32% versus gold this year. It's the best performing out of these currencies that I'm quoting. Swiss franc. This is quoted in kilos. The Swiss franc price is quoted in kilos of gold. So 40,151 closed last year. Now it's 42,030. That's a debasement of 4.68%. So the Swissy is one of the worst performing ones out of these. And finally, the Chinese currency, Chinese yuan or CNY, the ticker. Last year it closed at 8,822.4. Last night it was at 91.4530. That's 3.66%. So it's actually performing similar to the US dollar, the yuan. So they're all sinking. So if you have extra savings of these irredeemables, you need to get into precious metals, in my opinion. This is not advice. This is what I've done, and it's worked. The irredeemables, right? Like the deplorables. These currencies are the irredeemables. So quickly, just look at what the markets are doing here. Before I look at the markets, show you a daily chart of gold, and it looks, I've been talking about this falling wedge for a long time. A few weeks ago, it broke out of it, and then it failed. But as you can see now, it's definitely breaking out, and the key levels are going to be, of course, around 1365 now. That was the high from last year, around 1365. Got the high this year at 1347 or thereabouts. And then, of course, that 1375 level. I also did a little bit of calculation about this formation, falling wedge. You can project, where it could go in the medium term. Difficult to tell the time. So you take the bottom from last year at 1161, because that's the leg up that we've had, and then we've had the consolidation in the falling wedge. So you take that and the distance from 1160 to the high of around 1346, and you measure that off the breakout area here, which is around 1285, and it gave me around 1475. This is where gold could go. I don't know when, but this is what it's telling me. We'll see if it works. So quickly, let's see what we're doing. Right now, actually, gold is up again. We're making a new high, breaking yesterday's high. We're at 1328, up $3. Silver is at 1480, up 2 cents. Silver yesterday was underperforming early on, but then it caught up, so that's encouraging. We'll see if that happens again today. Stock markets yesterday, really not a great day, even though the Dow and the S&P managed to, stay pretty much unchanged. While the Dow is up only 4 points, S&P was actually down 7 points, so over 1/4%, and the Nasdaq actually was down 120 or 1.6%. So it wasn't a great day for the stock markets. So right now the Dow's up 68, S&P is up 8, Nasdaq 100 is up 18. The dollars continue to go lower here. I saw the euro did well yesterday. The pound traded up a little bit as well. We're seeing the same thing happen this morning. Pound is up 0.2%. Euro is almost back up to 113. It's up 1/3% at 112.75. Dollar is breaking below 108 against the yen. That's not a good sign either. We're at 107.93, down 0.13%. Chinese yuan is unchanged, 692. Crude oil, 53.20. WTI, unchanged. Brent is down 1/3 at just below 61. What about the bond markets? Yeah, yesterday another big move lower for yields. We almost got down to like 2% in the 10-year. I think it was around 206, the low. Right now we're at 209, so we're unchanged on the day. Yeah, the central bankers, they failed, in my opinion. This monetary policy of zero rates, QE. This has been going on for since the crisis of '08, especially in Europe, Japan, and England, Bank of England. I know the U.S. tried to normalize, and they couldn't. And why did the U.S. Take the lead? Well, because the U.S. is the leader, the reserve currency. But this just goes to show that the central bankers are cornered, and they'll never be able to unwind this. So this is going to end in tears, and I don't know how it will end, but it won't be good. And that's why you need to protect yourself with these. All these, of course, these are 400-ounce bars, but this is at the Bank of England vault, supposedly. Most of it, though, is held for foreign central banks, like the Bank of Australia, the Reserve Bank of Australia. England only has 300 tons. Very, very small percentage of that. But I guess there's an old saying that possession is 90% of the law. So maybe the Bank of England isn't that stupid. If you enjoyed this video, make sure you hit the like button. Subscribe to the channel if you haven't yet. I think we've just gone over 24,000 subscribers, so that's good. Also, try to share this video far and wide if you think other people would enjoy this kind of content. And you can also follow me on Twitter, Steemit, and on DTube. I wish you all a great day. Take care. Bye.